Good morning and welcome to this Baldwin CPAs webinar. Before we get started, I'd like to review a couple of housekeeping items. First, this is a listen-only webcast. There will be a chat button at the bottom of your screen where you can submit questions. We will try to get to as many questions as possible during this hour. However, following the webinar, we will be publishing the slides, handouts, and the Q&A portion to our website, and you will receive an email with a link to the page when it's uploaded. The Consolidated Appropriations Act of 2021, which was signed into law on December 27, 2020, contained two provisions that extended and expanded the employee retention credit for employers. These changes provided much improvement for the credit, including allowing businesses that receive PPP loans to be eligible for the credit. Over the past few months, the Baldwin CPAs team has worked diligently to stay up to date and well informed on the intricacies of the ERC, and we are here to help you navigate and take action on your tax strategy plan. During this webinar, members of the Baldwin CPAs team will walk you through the employee retention credit details and how they can assist in your tax strategy. Our presenters today are Beth Overby, member and CPA, and Ross Vanoli, CPA. I will now pass the presentation over to them.
Great, thanks, Haley. Good morning, everyone, and thank you for joining. This makes our third webinar on the employee retention credit, and it's perfect timing because the IRS just released two different notices that provided and answered some really important questions. So we're excited to bring it back in front of you today, and we think it's a great credit, and we hope more people start to take advantage of it. So we're going to start with just a little bit of a timeline of the ERC. It was first brought to us back as part of the CARES Act in March of 2020, and it was for wages paid starting March 12th through January 1st of 2021. And if you remember, the big part was that if you were a PPP recipient, you could not claim the ERC. So a lot of clients and businesses obviously went for the PPP and did not really look closely at the ERC. As we move forward to the Consolidated Appropriations Act, which came out in December of 2020, they luckily passed where now recipients of PPP can claim the ERC retro to March of 2020. And then if we move forward 3 more months, in March of 2021, the credit was expanded again to go through the end of 2021. And there were some good changes. So we really tried to look at this credit in 2 different ways, 2020 and 2021. And we're going to dive into a little bit more of the details that are on this slide. But this slide is a really good 1-page summary that we're going to post on our website after the seminar. So we just go back to the basics. Remember that this is a payroll tax credit, so you have to have payroll. And it's for qualifying wages starting in March of 2020 all the way through December of 2021. It was completely intended to provide liquidity to employers during the pandemic. And it's for employers of any size, which is really nice. So it really covers a broad range, and it includes our tax-exempt organizations. So when we look at the credit, the first step is really to determine who is a qualified employer. And there's 2 different ways you can qualify, and it is an OR test. So the first way is if you were fully or partially suspended operations during any calendar quarter in 20 and 21 due to a government order limiting commerce, travel, or group meetings. Or you experience a significant decline in gross receipts. And I think it's important to note that the decline does not have to be related to COVID. So again, the first step is really to determine how do you qualify. Is it that first step under a fully or partially suspended, which you'll hear that referred to as a government test, or the decline in gross receipts? So with the decline in gross receipts, it is the easier of the 2 ways to qualify. So we usually start there. And in 2020, your decline had to be a 50% decline quarter over quarter compared to 2019. And then in 2021, that percentage dropped to only a 20% decline in gross receipts. And you're still comparing off of 2019. So what we have been seeing is that some clients are not qualifying in 2020 on their gross receipts, but maybe due to more of the shutdown. And then in 2021, they're able to qualify under the gross receipts since it's only that 20% mark. The second one is fully or partially suspended. I'm going to let Ross jump in and go into more detail on this test.
Thanks, Beth, and good morning. The second part of eligibility could be is a business fully or partially suspended due to orders from an appropriate governmental authority limiting commerce, travel, or group meetings due to COVID-19. A lot of people think of executive orders from the governor, but this applies to local orders as well. Could be a city mayor placing an order, shelter-in-place order. Could also be just a curfew order that impacts operating hours. I think that at this point, you probably, well, can we go back a slide? Sorry.
Oh, sure.
Nope, back one more. Thank you. Okay. So as you can see, this is kind of subjective in this way, and that's why we like to do the gross receipts test first. But you might have to document this really well if you're wanting to take this avenue. So unfortunately, you may have to relive those COVID days, go back and think about how your business was impacted by governmental orders. Now, the next slide, we're going to touch upon some examples here. The first example, we've got an auto parts store. There was a part shortage from suppliers. This one would be eligible for a partial suspension. The second example we have here is auto dealership. It's kind of an interesting example. They've got a non-essential business with a service department that is essential. In this particular case, if the non-essential portion of the business is greater than 10% of gross receipts or hours, it would be considered eligible for a partial suspension, an ERC. Now, these next two is probably the easiest ways to qualify for partial suspension. Restaurants, takeout only. Early in the pandemic, in Kentucky, we were limited to takeout and delivery. And then later in the pandemic, we had 50% capacity, went all the way up to, I think, 75%, but until June 11th here in Kentucky of 2021, they would be eligible for a partial suspension. Finally, we've got a hospital. This could apply to any doctor's offices or we'll say dentists, where they have elective surgeries. There was an executive order from the governor that did in fact delay those. And if those elective surgeries were more than 10%, then more than 10% of revenue, this business would qualify for partial suspensions. We move on to the next slide. These are going to be examples that are not partial suspensions. And this first one, we've got, let's see here. We've got a grocery store, but the salad bar is closed. That's a nominal part of business. So in this particular case, it's an essential business with a nominal part of the business being non-essential. It would not qualify. That's less than 10% of the business. Next, we've got a hardware store in Kentucky. This would have been an essential business. customers are just not coming in. Has nothing to do with a government order. Therefore, partial suspensions, or it would not qualify for a partial suspension and ERC. Attorney's office, workplace closed, but business continues remotely at comparable level as before COVID. This one also would not be eligible. Finally, we've got a clothing store. This, you could insert any non-essential retail store here. The density in store limit, density in store limited, short wait outside for customers. In this case, not going to be eligible for a partial shutdown. I mean, I like to think if you were waiting in line for a cash register, that's not really going to keep you from shopping to that business. So that's not going to work. The big thing that you really have to stress on these things definitely is that it has to be government related shutdown. Can't be like a worker shortage or something along those lines. Beth?
Thanks, Ross. I think too, just to reiterate what you said, is that what's going to be important when we try to document the partial suspension is that every business really took a different path during those months and this past year and a half. So it's going to be important to really think back into what your business had to do. How did it alter its operations? How was it affected? And really relive those times and document to help build that story for the partial suspension. So the next step, once we've determined the eligibility, is to determine qualifying wages. And the qualifying wages is going to depend on your average number of full-time employees during 2019. So again, we have two different amounts or two different numbers to look at. In 2020, we're at 100. In 2021, we're at 500 average number of full-time employees. So if you are over that 100 in 2020 or 500 in 2021, then the qualifying wages are only the wages paid when your employee is not providing services. So that's going to be much more limited. Now, if you're under the 100 employee or 500 average full-time employee count, then it's going to be all wages paid during your qualifying period. So for example, if you have less than 100 employees, average full-time, we did get some IRS clarification, which we'll touch on in a little bit. So less than 100 employees, and you qualify in the second quarter of 2021 or 2020, I'm sorry, for the 100, then you can look at all your wages paid during that second quarter. If you're over 100 employees and you qualify in the second quarter, you can only count the wages paid to employees while they were not providing services. So basically while they were at home. So you can see it really widens the availability of wages if you're less than 100 for 2020. And then the good thing is for 2021, that is now less than 500. And then the really important part is, how do you claim the credit? And so as we discussed at the beginning, it is a payroll tax credit. So the credit is claimed on your quarterly payroll tax return form 941. If we are able to claim the credit retroactive to 2020, then we must file an amended 941, which is a 941X for the quarter that you would qualify. And that credit reported on the 941X, that will be requested as a refund. Unfortunately, that can't be applied to future quarters. So that 941X, the amended form, will request a refund. Now, if we are able to qualify in like the current quarter, third quarter of 2021, you are able to reduce your current payroll tax deposit. So it does give you some immediate relief on cash flow. I'm going to turn it back to Ross, and he's going to go into a little more detail on the importance, and we can't stress that enough. If you take away anything from our webinar, we hope that you take away really how interrelated the PPP loan forgiveness and ERC calculation is. So I'm going to turn it back to Ross, and who will go into a little more detail.
Thanks, Bev. All right, employers who received a PPP loan are definitely eligible for ERC. However, you cannot double dip, meaning you cannot use the same wages for PPP loan forgiveness that you use for ERC. The same goes for some of the other CARES Act grants and credits that are on there, and they're listed there. We have found that the best way to go about this is to handle PPP loan forgiveness and ERC together at the same time. This allows to carve out wages or payroll for PPP forgiveness and then while maximizing the ERC credit. The biggest thing that we can stress about this, and Beth's already touched upon it, do not get in a hurry with PPP forgiveness. There are some banks, and they've got a good position or a good reason why they're doing this, that are talking to clients and trying to get them to file for forgiveness as soon as possible so they can get the loan forgiven and get it off the books. Take your time. Anything that we've learned over the last year or so, the longer you wait, the easier it's going to get. So really take your time and don't be rushed into PPP forgiveness. The biggest thing here too is that payroll costs for the PPP could be 60 or 60%. So we can really kind of play with these numbers to kind of finagle maximum ERC credit.
Thanks, Ross. As I stated at the beginning, we had great timing on our webinar because the IRS issued 2 notice clarifications on August 4th and August 10th and answered some really important questions on the ERC. And the first one that they did address, which is going to sound like a very simple question, do the wages of a majority shareholder and a spouse qualify? Well, leave it to the IRS to have a very complicated answer to this. And so it's almost it really is a 2-tiered answer. So when you first look at it, it's going to depend on what's called family attribution rules. So certain relatives to the majority shareholder are not going to be allowed for the ERC calculation. And so this would be for the taxpayer. If the taxpayer business is a corporation, it would be the majority owner. And if they're a non-corporate entity, which would be a partnership, it's the majority owner as well. So the first thing to look at is these relationships on the screen, child, brother, father, mother, for example, all are excluded because of the family attribution rules. Then the next step of the answer was basically they looked at constructive ownership rules. And really what this boiled down to is, if the majority owner has any living ancestors, didn't matter whether they were actually employed by the business, but literally they exist, then the wages of that majority owner and spouse don't qualify. If they don't have any of these particular relatives, then their wages do qualify. So again, what seemed like a pretty simple question is turned into a fairly complicated answer. As Ross and I looked at this and as some guidance is starting to come out, it really doesn't seem like a lot of owners and their spouse and their family will qualify. So that is something we're watching as additional guidance may come out from the IRS. But at this point, it seems that those are pretty much excluded. And that was a big question for the majority shareholder or owner and the spouse, and then their family. The second was a good one for our restaurant clients and businesses. Cash tips over $20, which are reported as wages, are qualified wages for ERC. And the wages that qualify are both, you're eligible to take them for the ERC credit and the FICA tip credit. So I thought that was a really good clarification for our restaurant industry in the ERC. Because if you go back to what Ross was saying, we really feel like it's pretty clear that most restaurants were severely impacted by those shutdown provisions. So they would be able to qualify under that government test. And now we can get some clarity on the wages. So any tips over $20 that are reported. The next item that the IRS qualified was full-time employees. Everyone questioned, is it full-time or is it full-time equivalents? And so the IRS did come out and clarify it is considered full-time, not full-time equivalents. And they define it as any employee who worked at least an average of 30 hours per week or 130 per month. So again, we hear full-time equivalent a lot, and this is now clear for ERC. It is average full-time employees. There is some income tax consequences of claiming the ERC, and I think this is an important one to keep in mind. As we stated, the ERC is a payroll tax credit, so you are getting a refund of your payroll taxes that you paid in for your employees. And so what the IRS has clarified is that you do have to take a reduction on your income tax return for the amount of the ERC in the tax year the qualified wages were paid. So I think an example really helps in this situation. If you're employer A and you were a PPP loan borrower, you determine that you qualify for the ERC and you file an amended 941X for second quarter, for third and fourth quarter of 2020, but you actually just did it in 2021. And the employer, the business, has already filed their 2020 tax return. They did that back in March. And come the summer, they determined they were eligible. So we went back and filed the amended 941s. So what the IRS has clarified is that we do have to go back and amend the income tax return and reduce the wages we originally claimed by the amount of the ERC. So for example, if the ERC, as in the slide, calculated to $100,000, we have to go back and reduce our deduction on the tax return by $100,000. So what we have found in the credits that we've calculated so far is that for our for-profit businesses, there will be an increase in income tax, but you are still net positive when you are claiming the ERC. Just be aware that that is one item we like to look at, so that way you understand what is your true net savings of the ERC, and that we do have to go back and amend returns if it does go retro to 2020. I wouldn't let this concern you. I mean, this is just part of taking the credit, and again, the credit is going to definitely outweigh the amending any tax returns. Another great item that was clarified is what is excludable from gross receipts. So the IRS has created a safe harbor that will allow businesses to exclude certain amounts they received from other coronavirus economic relief programs. And this would include your PPP loan forgiveness. So that is not considered gross receipts for the ERC. If you received a shuttered venue operators grant, they term that the SBOG, so you could hear that either way, or the restaurant revitalization grants. So that would be for our restaurant industry. So what they've said is that when you're doing your gross receipts calculation to see if you qualify, that 50% or 20, that you do not include any of these amounts in your gross receipts. And you do have to apply this consistently. We're not sure why you would not, but they were very clear. The other thing the IRS said is to be clear, the safe harbor only is for the ERC. Another item that I thought was very interesting, and so they created a whole new eligible employer category that just applies to the third and fourth quarter of 2021. And they termed it recovery startup business. So a recovery startup business is one that began carrying on a trade or business after February 15th, 2020. So you were a new business or started a new business that February 15th or after. Your average annual gross receipts are $1 million or less, and you don't otherwise qualify under our government test or your decline in gross receipts. So basically what they have said is for the third and fourth quarter of 2021, we've created this whole new business category that if you were a new business recovery, that you need to look at the ERC. They also have stated that the recovery startup business will receive small employer treatment. So basically they are allowing you to qualify under 500 employees, and they will not limit your wages to when they were working. The credit is limited to $50,000 for each third and fourth quarter of 2021. So I thought this was, so keep this in mind. You know, we've really always been talking about businesses that have been in business back 2019. So now they have carved this out for those that just got started right before COVID hit. I'm going to turn it back over to Ross. As you can see, there's been a lot to the credit, and he's going to go through the items that we are going to need or that we will look at to help determine businesses' eligibility.
Thanks, Beth. All right, so the first thing that I'm going to ask you if I call you up and am trying to determine eligibility for you, I'm going to ask you, do you have any businesses that are common ownership? This is important because if you do, we have to aggregate some of their numbers into the business that you're wanting to get ERC for. The first one of those numbers is the number of full-time employees in 2019. As Beth talked about a little bit, that's going to determine whether you're a large or small employer for ERC purposes. So that will be important. Then as well, we've got income statement and profit and loss. This is where we're going to get our gross receipts from for our gross receipts test. We would need quarter one 2019 through quarter two, I guess now, of 2021, so that we can test eligibility for gross receipts. This is a much more cut and dry method or way to qualify. So we'd start there. And if you have a commonly controlled entity, then you will need to add your revenue and gross receipts from that commonly controlled entity into the business that you're trying to see if is ERC eligible. If you are not eligible with this gross receipts test, we're going to start to look at, did the business fully or partially suspended operations? We're going to go that route. If we go that route, that's when we get into being a little bit of a gray area, a little bit subjective. need to create some sort of narrative for that. And then once we, that would be hopefully be the way that you become eligible. We can move on to the next slide, which will talk about estimating the credit, which everybody wants to know about. To estimate the credit, we're going to need some payroll reports. This is often going to be by employee, by quarter. Then we're also going to need the employer share of employee or of health plan expense by employee. Both of these, it would be helpful if those were in Excel. The next item we've got is PPP-1 and PPP-2 loan information, such as loan disbursement date, the PPP loan amount, as well as the payroll costs that were used. If we didn't do the forgiveness, we'll need to know that because you can't double dip. We're going to have to use both, or we're going to have to know that amount so that we don't use those wages for ERC. And then finally, we've got does the business employ any family members of the majority shareholder? Because those people are going to be excluded, and we're going to have to take those out of there.
One thing I wanted to reiterate when we talk about the calculating the credit, just a reminder that in 2020, the qualifying wages are capped at $10,000 for the year, and the credit's up to 50%. So you can get up to $5,000 per employee if they have qualifying wages. And the qualifying wages do include the health plan expenses. So we always like to make sure that if an employee is short on qualifying wages, we want to look to those health insurance expenses. And then in 2021, that 10,000 annual cap now goes to a quarterly cap. And so it's $10,000 of qualifying wages per quarter. Up to 70% is eligible for the credit. So you can see when you think about the ERC 2020 and 2021, while they do share some common rules, the calculation is different. So you're going to have a $10,000 per quarter, and it's 70%. So it's up to $7,000 per employee per quarter. So what we have seen so far is that 2020, a lot of clients use second and third for PPP. Fourth quarter, we're able to maximize towards ERC and really get to that $10,000 max. Then when we move into 2021, we're still seeing a lot of clients that are eligible because that gross receipt decline is only 20%. And you've got at least first quarter with what we've seen is normally no PPP interaction. And so we're able to take the full 10,000 at 70%. And then in second and third, that's where PPP round 2 has started to come back into play. So this gives you a good idea of just the information that we are pulling together for our clients and what you would want to look at. Really important in the infrastructure bill that was passed by the Senate on August 10th. And this did include a provision that would end the ERC early at the end of third quarter. So we're really keeping an eye on that. What we heard from some of our organizations was that businesses really were not taking advantage of it, so they did not see a real reason to continue it. And I really think we got to change that because it is a great credit, and we really feel like most businesses that did not look at it because of PPP really need to make sure they've revisited it, and that would definitely include our nonprofits. So again, if you want to make a call to your representative, let's make sure we keep that ERC in play. I think it's going to be important, and we would like to have it available through the end of 2021. So just something we're keeping an eye on. Okay, I think that brings us here roughly to the end. We put our contact information up so that you know how to get a hold of myself or Ross. We are, as a firm, we've pulled together several team members to help focus on the credit just because of the complexity and the importance of it. So we hope that that dedicated team is able to really respond and help businesses get the credit. Ross, anything you want to add?
Not really. I think we've got a few questions if you want to jump in. You ready?
Sure.
Okay. I think the first one that I see on here is, can a sole proprietorship Schedule C with only the owner as an employee utilize ERC? I would say the answer is no.
Yes, I would agree. I think it is no. I think if the Schedule C, if they have employees, then they would be eligible for that payroll. But I don't believe you're eligible for just the self-employment tax paid by that Schedule C owner.
Okay, the next question is something we definitely planned on touching upon. I don't think we did. How soon will the IRS process and pay ERC credits from filing the 941X?
Boy, that is the $1 million credit. At this point, what we have heard is 6 to 9 months, and that it is such a wild card. The IRS is behind, and I think a lot of people are seeing that, whether that's their refunds are being delayed, that is notices they continue to get, whether they tried to call the IRS, they're basically not picking up the phone. We have some hope that they will get caught up. The problem I think we're facing is we're going into kind of a second busy season for filing as we start to process our extended tax returns. The IRS has had a rough go in this pandemic, just like a lot of businesses, and they've had to process the stimulus payments. They've had to process the advanced child tax credits, and that really has put them behind. We hope that with continued vocal support from businesses and our internal CPA organizations, that we can push those 941 amended to be filed quickly, because the point of the credit is to add liquidity and to really provide that support. But if it takes 6, 9, 12 months to file and get your money, it definitely doesn't give you a much immediate help. But again, I wouldn't let that discourage you. I think the sooner we can get the credit calculated, make sure we work with PPP forgiveness, and you get those 941s in over the next couple of months, I think it's good. I will say that there is, I believe, a 3-year statute of limitation on filing corrected 941s. So you don't have to rush tomorrow, but I do think it's something, at least from our firm perspective, we have wanted to move forward over the next 2 to 3 months with. So that is one item we are watching, and if we have any updated information on process and timing, we will get that out immediately.
All right, the next 2 questions kind of just have to go with this. So I picked these 2. Once submitted, is there any way to know if the 941X has been received by the IRS? And is there a way to track where your refund payment is with the IRS? I do not believe there is. Beth?
That's our understanding as well. We have recommended our clients send in the amended returns via certified mail, so that way you do have tracking of when you mailed them and when they were received. But past that, at this point, I am not aware of any way to track the progress. We really just hope it speeds up.
Yes, definitely. There's people want some clarification on the number of employees, see how much of the wages are eligible. They want to know, is it the number of full-time employees for 2019 or 2020 or 2021? The answer to that is 2019.
Yes.
You take all the numbers, it's always from 2019, not from 2020 or 2021. Let's see here. There is another one.
Ross, I would just add, I think the thing to keep in mind with that comparison is that it's good to go back to 2019 is what we have found is that the gross receipts compare and you're looking off your full-time. And remember, that's your average full-time employees, not full-time equivalents. But yes, always go back to 2019 at this point for that comparison.
Okay. Another question here we've got is, what do you do if you already filed for ERC and used owner and relative wages before this ruling came out? Probably amend the returns, but Beth, would you like to touch on that?
That one, we might have to think on that one and get back. That's a good question. Let me give that some thought. I have a feeling now that this guidance has come out, we will see that question raised. Yes, you do have to wonder if filing an amended 941 again would be the right path. But I'm hoping that the IRS will clarify that. So for now, we will review all the questions and make sure all our answers are posted on our website, and we'll follow up directly on that one.
Okay. Let's see here. A sub S corp who files amended returns will need to send revised K1s. Shareholders receiving revised K1s will need to file amended returns as well. Yes.
Yes, that's correct. So if you are an S corp and you've got multiple owners, then we would want to be communicating to all the investors or owners the plan with the ERC, how much the credit is going to be, what's the potential impact from an income tax perspective, so that everybody can really understand the true net cash impact of the ERC. But yes, there will be some amended returns that your individual owners will need to have filed.
All right, I think this is a good one here. Our loan, this is a specific example. Our loan was forgiven. We showed $500K in payroll for the 24 weeks, but our loan was only $300K. Can we still use the $200K for ERC?
So that is a really good question. And so the IRS did come out with guidance that basically said if you had filed your PPP, boy, are those not three letters that we've said so much this past year and a half. If you filed your PPP forgiveness for round one, prior to their guidance, which came out in December, and you listed excess payroll on your forgiveness application. So Ross, was the example, it was 300,000 PPP and $500,000 worth of payroll?
Correct, yes.
Okay, so what they said is that $200,000 difference can still be eligible for ERC. But that is only for the applications that were filed before December 27th, when they expanded the ERC. They also said, though, that yes, you can take those wages, that $200,000 excess, but you can't take that 40% of expenses that you did not put on your application. So basically, they're not going to let you go back and fix your application to say 60% payroll and 40% other qualifying items for PPP. But like a lot of us, and encouraged at the time, put a lot of extra payroll on those forgiveness applications. That is what they are stating is still eligible. Now, after 12/27 of 2020, that's what we mentioned earlier. There's no longer that safeguard. So whatever you put on your application as wages are done. That's PPP. We cannot pull any of that off for ERC once it's filed. So again, please don't rush into PPP round 2 forgiveness until we or you have thoroughly looked at the ERC eligibility, because once you file that PPP forgiveness, those wages are off the table.
Okay. So the next question I've got, does the EIDL grant count towards gross receipts since it is not considered taxable income?
I would exclude it.
Yeah.
I mean, they did not mention that specifically in that guidance, but it does fall into that that coronavirus relief packages. So I would bet we get some clarification on the EIDL grant, but at this point, I would exclude it.
I would agree on that. I think we've got 1 or 2 more questions. The potential ERC is 7.65% of qualifying wages. No. Beth, do you want to go into that a little bit more?
Right. And so the amount is 70% of the 10,000 in 2021. That 7.65, probably what you're going towards is that's your Social Security and Medicare percentages. And so, yes, it is a payroll tax credit, and it does look at the amount of Social Security and Medicare tax paid in, but for calculation of the credit, it's 70% of the $10,000 qualifying wages per quarter.
Okay, last question.
Good questions.
Yeah. Oh, man. Last question we've got here is, does the business determine if we are qualified for each quarter and then calculate the credit for each quarter? Yes, that would be correct. Actually, it looks like we got one more come in.
Yeah, just to clarify on that, Ross, I think they were asking, do they look at qualification each quarter and then calculate the credit per quarter? And yes, I would agree. So we've tried to look at each quarter from March 13th of 2020 through current. First, determine which quarters calculate or which quarters qualify, either gross receipts or partial shutdown. And then once we know which quarter you actually qualify, then we go into calculating the credit. I'm sorry, maybe the mic. Ross, can you hear me now? Okay, great. I think, Ross, do we have any other questions, or we're getting close to the hour and we really respect everybody's time? I do see one more. So if we have 8 employees, but one of them is the owner, then the eligible wages are only the 7 non-owner. And so, yes, we'd want to look at just to make sure the relationships, but assuming the owner has some living relative, then more than likely that owner would not qualify. So I think we might have a few more questions coming in, and we will make sure we can get those answered. So we're going to put on our website, just for everybody that attended and signed up, there'll be a full recording. There will be a copy of our slides. There will be the one-page slide that I started with earlier. Hopefully you can use that as a good point of reference. And then we will put our FAQs on there as well. And we did touch on a lot of those, but we will put them on there. And so we'll leave our contact information up. Please don't hesitate to reach out. We love this credit. We want everybody to get every bit of money that they are eligible for. So please reach out with any questions. Thank you for attending.